Managing money reactively costs you. Late fees, missed investment windows, and tax penalties quietly drain your accounts when you rely on last-minute decisions. To solve this, we are going to build a comprehensive month-by-month financial playbook for FY27. Over the next few minutes, you will schedule your recurring transfers, build a tiered cash reserve, and run a diagnostic on your small business for major tax exclusions. Transitioning to a strict 12-month calendar removes the need for constant decision-making, helping ensure your investment plan stays active even when life gets busy. Let's start by opening your digital calendar and blocking off the first weeks of April and May. During these weeks, your priority is to set up automatic transfers that target high-interest debt. Schedule payments to hit your credit cards and personal loans the day after your paycheck clears. Next, set up automated transfers for your mutual fund systematic investment plans, or SIPs. This ensures you participate in the market consistently, regardless of daily volatility. By May, you should also create a dedicated digital folder to store your financial documents. Collect your pension slips, bank statements, and mutual fund investment proofs here. Forcing these systems into place early in the year removes the emotional friction of saving and paying debt. Automation makes your financial contributions the default state. With automation running, you need a robust cash reserve to cover 4 to 6 months of living expenses against rising global inflation. High-yield savings accounts offer easy liquidity, but their rates are variable. They are highly vulnerable to sudden interest rate drops. Those fluctuations are driven directly by the Federal Open Market Committee, which adjusts rates based on macroeconomic data. This chart shows the discrepancy in available yields. While the national average rate sits at 1.66%, top-tier certificates of deposit offer guaranteed returns as high as 4.94%. To capture those high rates without locking up all your cash, you can build a CD ladder. You execute this by dividing your cash reserve evenly across 3-month, 6-month, and 1-year maturity blocks. As each CD matures, it releases liquid cash back to you. Structuring your reserves this way secures high yields to outpace inflation while guaranteeing you have cash accessible when an emergency strikes. Moving past the setup phase, let's look at the critical deadlines from June through March. If you owe advance tax, mark June, September, and December on your calendar. These are your mandatory quarterly installment deadlines. In July, you need to file your income tax returns and run a thorough check on your credit report to catch any early signs of fraud. Be careful in October and November. The festive season triggers impulse spending. Avoid high-interest debt for these purchases. Then, schedule a comprehensive budget review for February. You will need to realign your finances based on the central government's new union budget announcements. Tracking these external fiscal milestones keeps you compliant. It protects your cash flow from government penalties and predictable consumer debt traps. For small business owners, the calendar also requires a diagnostic check tied to the One Big Beautiful Bill, or OBBB. This checklist breaks down the Section 1202 Qualified Small Business Stock Framework, which now allows for a potential $15 million gain exclusion. The first test is your entity type. Your business must be structured as a C corporation. This explicitly excludes default S corps and LLCs. Next, your business must remain under the $75 million gross asset cap, and it must operate in an eligible trade. Successfully passing this diagnostic and carefully weighing the risk of C Corp double taxation allows you to shield a significant portion of your gains from federal tax upon sale. Look at your FY27 calendar now. It is fully populated with your automated transfers, maturity dates, and tax deadlines. You have successfully set up your debt payments, laddered your emergency cash, and mapped a precise business tax strategy. By locking in this architecture, you are better prepared for market shifts and liquidity needs in FY27. With the foundations automated, you can focus on long-term goals. Download the master checklist below to get started.